So like I was saying, right, is that we're gonna have this bias here that is gonna be framed once this enters into this fair value gap. What solidifies the fair value gap is the order block that we have here. And now with that, it's gonna help us frame the idea to go long from Monday onwards. So Monday, Tuesday, Wednesday, Thursday, Friday, our bias for the week is gonna be looking at longs. So you're gonna be looking at this is the weekly high for this week, and then this is the draw on liquidity. If this reaches here by the end of the day, and then we know immediately we're gonna have a bounce off on Sunday evening, a retracement on Monday into the opening gap, and then from Monday we can have an OSOC setup aiming for this liquidity up here. See, so yeah, what solidifies the liquidity also is that we may have a turtle soup here with this bearish fair value gap on top. This gives us more confirmation that we could be possibly looking at this as a draw on liquidity. Because I mean, when we looked at the beginning of the week, we saw we were somewhere here, and then we anticipated this would be our draw on liquidity. We took that draw. So definitely, if we've gone from bearish to bullish, and we've had our market structure shift here, our first retracement into the fair value gap, we can only look for more setups to continue the bullish run upwards. So we might look here, we take this draw, there might be another fair value gap here, until we take the draw until we reach the high draw, which is this one. That's what I expect to be reached at least before December. And we'll see how the elections play out on this. So yeah, that's looking forward. Over here, now we're gonna look in terms of what we could have framed, because I know I said that we had one win for the week. The rest were either the rest of the setups the markers left us behind, mainly due to news. And with Newsweek, one thing I've learned about Newsweek or wanting to take away from Newsweek is that when you get a setup on the Monday and you know the direction, just hold that setup. Because I mean, if we had the setup on the Monday, here we bought, I'm pretty sure, and then we had the sell off here, and then from this we framed the buy. Yeah, I think it was the buy that we took the setup for, and we took TP at this fair value gap, and then price kept on going upwards up until the weekly draw. So it would have been a good idea that if we had framed the setup of going long on Tuesday and holding it, we would have had a good result if we held it all the way towards the draw. So let's say we were on Tuesday, and then on Tuesday we frame the setup here. We haven't at 8:30 we get this liquidity is taken at 9 o'clock. It sweeps the 8:30 liquidity again. We then get our shift past the order block here, giving us a change in state of delivery. And then with this movement up, I think at the 50% range. Yep, price retracing the 50% range. And then from here, there was probably a lower time frame PDRA. Let's look on the 15 minutes. But we're just reviewing the ideas that were framed here. So yes, when you look at the 50% range, we have this inversion fair value gap over here. So let's mark that as an inversion. Right there, inversion fair value gap, and that gives us price higher. We could have also marked out the initial fair value gap. This is what gives us double confirmation. You see, so if we were framing it on the day, then this would have been double confirmation. And that's like around, I think it's PM session, AM session. Well, it's within the kill zone of New York session. And then another way we could have verified this is if we check this range here, and we see that this is below the just premium discount. We see that the inversion fair value gap that we chose, is why we chose this one and not this one, because this one is found below the 50% range, making it a more favorable PDRA for price to come target. Same thing with this fair value gap, just under the 50% range. So it was a valid entry point. So if we took that entry right there, let's say on that, stop loss over here, and then let's say we aimed for our weekly draw our total in terms of RR would have been something of 1:5. Now, this is obviously for your long-term traders. I don't expect us as short-term traders to even want to look for such an opportunity. You see a 1:5, and this is now over the course of Tuesday, Wednesday, Thursday. So that's it. Over the course of 3 days, then you would have reached your target. Now, this is what we could have framed for Tuesday. You see, so we could have framed the setup for Tuesday. Let's say we were minimal and we did not think that far ahead, and we just thought in terms of the next draw on liquidity, which was this high over here. We would have had ourselves a good 1:2 ratio. And personally, for me, my stop loss wouldn't have been on the low. It would have been somewhere at the bottom of the fair value gap. That is generally how I place my stop losses. And that would have been our take profit system or our trade for that Tuesday. If we frame it here, we have a little retracement before hitting TP Wednesday morning. So same thing here. Now, if we look at this expansion from here over to here, and we try to seek its retracement level, so let's say from here to here, let me remove this and this one. It's getting hard to see. So let's say we take our fib and we draw a retracement level. We see that we don't have any PDRAs to anchor to, but we can see that the expansion still continues. So if we take our fib and we attach it to the end of the expansion, we realize that this here is our OTE range, which coincidentally price comes into, right? So one thing I want to show you guys that nothing in the market is a coincidence. If we see here, we have our OTE range, which is the 61 to 78% retracement level. Within that 61 and 78% retracement level, we have our fair value gap right there. And at 8 o'clock, this is 8:30, yeah, that is New York Open. We get our buy entry into that fair value gap. Our stop loss would have been anchored at the bottom of the fair value gap, and we could have targeted the next draw on liquidity, which is that high over there, and that would have been Wednesday's setup. Wednesday's setup would have been a beautiful 1:8 ratio. So yeah, that would have been Wednesday's setup. Even I'm surprised that we didn't catch that. But that's the beauty of reviewing. Reviewing allows you to see the opportunities that you've missed and having the chance to frame them in future again. So looking at that, right, let me just put away this participants tab. Okay. So after that, we can see here that within this, we get the liquidity sweep into that fair value gap and then right up. I remember on Wednesday, we had this setup. We framed our entry here off this order block here. We had that small reaction, but then we were taken out. I think it was because we didn't have the view of the, long term or the bigger picture, you see, because if we had placed the fib, or if I had placed the fib at the time, I would have seen the retracement level here, and then boom, we would have had this entry, which is very sniper in my opinion. And if we targeted the 50% of the fair value gap, we would have had a 1:10 ratio. But this was beautiful nonetheless. And then from here, we can frame, this is Wednesday, we can frame Wednesday's leg, which is here to here. And then we can see that this is our 79 to 61 to 79% retracement level. And as I said, remember, this is the inversion fair value gap and the order block that I was talking about at the beginning of the video that we would see price points off of before continuing. And if we look, we can see that within this order block and inversion fair value gap, we have our 61 to 78% retracement level, and it has a fair value gap there. So this would be our key to going long next week. So if we can frame an idea from here, and we have confirmation that we can take longs out of here. So I want to keep this thing short, and I think this is where we can end off the meeting. But from what we've already looked at, you can see that there was a great deal of opportunity that we both missed or failed to see in the market. But this is the idea.